sell Alibaba shares and also Meituan and Baidu and Tencent and go into something else? Well, that's at least what the big guys, the fund managers of BlackRock, are doing according to this article. So I'm going to discuss what BlackRock is doing, how it aligns with my personal strategy, and also talk a bit about recent market movements and maybe some new stock picks here. But before that, I would appreciate a like and that you subscribe to the channel and hit the notification button so you get all of the videos that I'm putting out there. And then in the comments, please let me know, what do you think, who's gonna win the Euros? Well, you see that I'm rooting for, well, the German team, of course, but lately they're not looking so good. Actually, if I would have to place my money, I would rather bet on Italy because, well, this team really looks quite hungry, and then, well, France is also quite good. I think they're maybe one of the favorites out there right now, but really struggled a bit against Portugal. And of course the German team was quite lucky to get through the group stage so far, but yeah, we are a tournament Mannschaft, so yeah, everything can happen during the tournament, and now really looking forward to play against England, one of our favorite teams to play against. But did you know that also quite a bit of advertisement in the stadiums is around TikTok and financial, so lots of Chinese banners there, and so you can see, yes, the Chinese are coming, and that's quite relevant. And now also back to some of the Chinese stocks and what's happening in the stock markets regarding, well, the big funds selling possibly the big tech names of China. So the key point of this article is that the fund managers of BlackRock, which is managing billions in assets, are quite, let's say, reserved about the Chinese regulations on the technology giants. We recently heard about crackdowns regarding monopolies in China and also, well, the tightened rules regarding that. And of course the issues with the Ant Financial's IPO, for instance, and all of the issues around Jack Ma. So lots of fear around Chinese stocks, or at least the big tech giants there. And essentially they're saying that this crackdown on technology stocks will actually last for a couple of years. So it's going to be a huge super cycle until possibly funds are flowing back into Alibaba and Tencent. And of course these stocks lost quite a bit of money recently, and personally I'm not invested in Alibaba anyways. I'm not a big fan of the company, and well, I'm invested in Tencent and Baidu when it comes to some of the mega stocks in China, also Meituan. Well, if you look at the valuations, then Baidu wouldn't count in to be a mega stock right now anyways. But for instance, in the case of Meituan, yes, they are also facing issues regarding monopolies and pricing power in the market and some unfair competition that they are possibly using in order to win clients. And then they also noted that in the e-commerce area, the companies are now investing more heavily in infrastructure, and that is also depressing well, the profits of these companies. So to just give you my personal opinion on that, and this is not investment advice, but in my portfolio I'm having Baidu, I have Meituan, and I have Tencent, and I'm not looking to sell any of these because of those crackdown issues. I think, for instance, Meituan will be just fine. I think the bottom line of the business won't be affected as much. And there are multiple revenue opportunities with Meituan that are well beyond e-commerce. They are more in other different areas, and I see them growing into kind of a super app in China. For Tencent and Alibaba, this might be different because they have real big monopolies, and well, they are the huge players in the field. And I think Tencent is kind of flying a little bit more under the radar here. Jack Ma, he made kind of the mistake here and going out more publicly and aggressively with the Ant Financial IPO, and basically criticized not only the government but also the regulators in the way that they are dealing with the financial industry and the micro lending and finances in China. And that obviously got them much more into focus. But I do think essentially that even Alibaba and Tencent will come out fine through this. Maybe Alibaba will have the hardest struggle there, as they are most focused on the e-commerce part. And the issue for Jack Ma and Alibaba, and why they may lack a little bit more here, is with the Ant IPO, they are really touching more on some of the financial issues in the country, and that is a very sensitive topic to the government because there is well, the security, the safety of the system, with all of the debt in the system for the housing market and so on, and the micro lending. This is truly an area where the government wants to have lots of regulation in place in order to control it. So that might be not the smartest move to go into this area. Just my 10 cents here. Regarding Baidu, I think they are actually not so much in the line of danger here. We recently also had an interview by the CEO who mentioned that he actually thinks that it's a good way of having more regulation, because that actually also gives more clarity to the companies. And Baidu is also just not much active in some of these sensitive areas. And I think they have actually even better government ties, as can be seen by lots of government projects that they are winning, for instance, for building out V2X infrastructure in the area of autonomous driving. But let's just assume these struggles go on and really the fund managers like BlackRock become more hesitant to invest in companies like Alibaba. Then what will be the opportunity against that? And I think that's actually quite in line with my personal investment approach here, because the article outlines what BlackRock could be buying, and instead the author says that they could prefer small to mid-sized internet companies, because they are obviously not subject to those anti-monopoly rules. And interestingly, she really likes companies operating in the areas of short video and live streaming. Now recently we had an IPO of Kuaishou, which I didn't cover here on the channel, because frankly I usually don't like to invest in IPOs that are actually already valued quite high, and I thought that the valuation of Kuaishou was already quite out of my league of where I would like to start investing. But actually, small and mid-sized companies, that aligns very well. For instance, the smaller companies that I picked, like Zepp Health and also Xunlei, these are really not even billion-dollar companies right now in terms of valuations. So maybe we see a little bit of diversification of BlackRock funds into those smaller players. And actually, if you think about Xunlei, this might be actually quite interesting, because Xunlei, with the cloud computing offering that I have, the peer-to-peer based CDN is offered mainly actually to enable better loading times in China. And if you look at the customers here, they have iQIYI, which is Baidu backed, they have Intu TV, they have Bilibili, they have Kuaishou. So these are live streaming and video companies that are using the services of Xunlei in order to have a better user experience for the users in China. And on top of that, Xunlei even offers direct video streaming applications, as well as planning on tapping into the trend of short video, which was mentioned on the last earnings call. It can maybe still take a while until they come out with a new product in this area, which should be a consumer-facing product, which is interesting as well. But generally, this really aligns with the strategy here of BlackRock. And of course, this is just hypothetical here, but it certainly fits with the narrative outlined here in this article. Now, there are two more Chinese companies that come to my mind that I would consider for investing in this trend of live streaming and video in China, which are Huya and Douyu. Both of the companies are sort of like a Twitch of China, active in the area of gaming and live streaming and live commentary. People can sponsor some of the gamers here and give them like some gifts, and that's how also these companies make revenues, by kind of getting a split from all of the gifts that are issued on the platforms here. And one commonality of these two companies is a common stakeholder, which is Tencent, which I really like, because Tencent is actually big in gaming, and I really like Tencent investments in general. And actually Tencent is trying to merge those two companies, and this is also actually one of the issues for these companies, because they would, I think, compromise more than 80% of the gaming market by that in China in terms of the live streaming coverage of that. And that is obviously once again possibly on the minds of regulators there, although I would say maybe the risk is a bit overstated here. But as you can see, for instance, Douyu, they sold off more than 65% from the recent February highs. Huya also not looking much better here, minus 50% for their shares regarding the tech sell-off. And not much recovery, so basically almost being at the really low support levels here. Now, to be honest with you guys, I haven't done much due diligence on these companies. I only had them on my watch list so far, and I noticed that, for instance, ARK Invest sold off most of their Huya positions, so maybe they haven't been as convinced with this company so far. But technically, if we look at those companies now, there's a market cap of around 4 billion for HUYA now and 2.5 billion in market cap for Douyi. And although there's uncertainty around the future of these stocks and if they can merge together, they're now sitting at these really low valuations. They're making billions in revenue, so the sales multiples aren't high as well. And it reminds me a little bit of Tiger and Futu back then. When I bought Futu and Tiger's stock back then, I was able to get them both together at less than 8 billion in company valuation, and already Futu now is close to 25 billion in market cap by now. So you can see there might be this explosive growth because you can essentially buy into, well, 80% of the market coverage in the field in which those companies operate in China. And well, gaming is a big thing. There's lots of monetization in the area of China. Live streaming is a big thing. So as I mentioned before, maybe one thing would be to invest in something like Xunlei, which is like more on the back end side and really a focused company. So you have more focus investing in Xunlei than, for instance, in Alibaba or Baidu, where you get part of the cloud business and so on, and maybe the CDN networks which they provide, but not so much as with Xunlei, where it is the core business. And then for Douyi and HUYA, you possibly have also the opportunity there that once investors are getting back into that field, and it seems like BlackRock is on the verge of doing that, then these companies are right now at really low valuations. But what will I do personally with that? Well, I'm currently maybe not ready yet to buy the shares of those two companies because, I haven't frankly done as much due diligence on them, and I need to look more into the details of this merger deal, for instance, but also the value propositions of these companies, the risk aligned with that, the management, the growth projections and all of that. But what I'm truly considering right now is looking at some of the options here, because for instance, if you look at Douyi here, and I'm looking 2 months out here for the options with a strike price of $7.5, you get them for below $1 in premium. So that is not too bad of a deal. I don't have to spend too much money on buying such kind of options, and in case that we see actually a rebound in the coming months, I could opt and exercise those options. So I purchased the shares on the cheaper valuations and where I bought the options. So that might be a way of scaling into this company and deal right now. And so this is what I'm currently considering. I definitely will keep you updated whether or not I actually take a position into those companies. My patrons will know whether or not I buy the options as well in the trading and investing signals that I'm posting. And so please let me know down in the comments not only which team you're rooting in the Euros, but also whether or not you want more coverage on those opportunities there. So thank you guys for watching. Hope you have a good weekend, and then see you in the next one.